Welcome back to Real Money, Aman. How was the trip?
Was good, much needed.
We had few people asking for you. A lot of the tips you gave last time and everything. You have, I think, quite a good client base and fan base, actually.
Well,
So people want to see you on this channel.
I'm glad I could help with as much as information I've got, and I'm more than happy to help more and, share my knowledge that I've got.
Thank you for making an effort today. Now, the news was shared and we talked about 7 days ago, Queensland man died due to the mortgage stress. And also the ABC documentary talking about like the rise in homelessness. So keeping all that in mind, give some tips on to the homeowners whose repayments are going up at the moment.
There could be a few different ways, and obviously this is depending on individual situations, family situations, and different household and where they are at this point in time. Number one thing that you can look at is obviously talking to your current lender. If you haven't spoken to your current lender in the last 3 to 6 months, have a chat with them, have a chat with the retention team. There's always discounts to retain the client, which is ongoing currently, and like that you can actually keep with the market interest rate, and that's where you want to be. Number two options, obviously refinancing and going elsewhere and making sure that you get a good deal out there and looking at all the options. There's not many cashback options. I mean, there are, but not the maximum cashback options as there were before the 30th of June. But now these are the two things that you can actually look at. Now, other than that, look, historically, well, the best thing to do is obviously budgeting. Income is more, expenses is less, and that's how you need to go and that's how you need to budget. But in saying that, increasing income is very subjective. But what you can do is you can actually budget your expenses in a way that you could tighten things up, maybe a couple of dinners in a week less to keep that mortgage or to keep those expenses in control, so that when the time comes and if it gets harder, all that money saved in your redraw offset account can come handy. And because of that, you could also save a lot of interest that you're going to be paying, and plus shortening that 30-year term that it will take you to pay off the loan, bring it down to 3-4 years in your redraw or an offset account, extra payment that will help you.
The next question, in terms of your interaction with the banks and also with the people, how vulnerable are people financially in terms of the mortgage repayments?
Like, in all honesty, like the clientele that I have and the people that I've been speaking with, I haven't had too many people in arrears. When I say too many, handful maybe out of hundreds that I'm talking about. So it's not really that alarming, to be very honest, as of now. But again, never know, another 2 or 3 interest rate rise, depending on how the RBA is looking at it. It could start getting towards that, because I have a lot of people with multiple properties who are trying to refinance and staying afloat. Basically, they're using their cash. That's what they're trying to do. All the money that they've been saving for the last 3, 4, 5 years during COVID and post-COVID is coming handy right now. Some people are trying to refinance and tap into their equity as a safeguarding themselves by keeping $20,000, $30,000, taking out of the loan, just keeping in the redraw for if anything happens. And obviously that can only happen if you have equity in home. So even, people are, for example, going to maternity leave. I have clients who are looking to do that as well, just so that, they don't get into that financial stress. So if you can be proactive right now and ride the wave, in the next year, hopefully when the RBA starts bringing the rate down subsequently, like they did now, to increase it, it's only going to help them to ride this wave for now. Probably increase your income if you can. If you can't really, because again, that's subjective, at least try and do some budgeting, because that's in hand. A few expenses here and there, you can, cut off some lunches and dinners just to keep yourself safeguarded against what could happen. And once the rates can start coming down, you can go back to your normal life, I'd say.
Is it advisable to have your car under your home loan?
Look, again, it's advisable in a way because it depends on individual situation. If your situation is such that with a car loan, if you have enough equity in your house, number one, if you want to pay off your car loan quickly, you know that if you put it into your home loan, it's going to take you another 25, 26, 27 or 30 years, depending on where you are in your loan term cycle. But what you can do if you wanted to buy a car, or if you already have a car and if you're trying to downsize your expense budgeting, then what you can do is you can refinance to your home loan, consolidate it, but keep that car loan repayment as much as you're paying right now, because then it becomes a choice. When you have to pay it, that's a different thing when it becomes a choice. For example, it's a $50,000 car loan, you're paying say $1,000 repayment. If you do that consolidation, it's going to be about $300-400 a month. So you can keep paying $1,000 towards that liability. What it means is you're actually then paying $600 straight to your principal. And comparatively, car loans are obviously higher than your home loan. So you're actually saving your interest as well. And plus, you're actually paying the car loan quicker, even quicker than your 5, 7, 6 or 3 years loan term. So that is also a way to do it. And again, it's very subjective. However, a person is in a situation in that particular time, they have the choice to make as much payment as they can. If they can do $1,000 right now, they can do $1,000. If they say, well, I need to cut off my payments a little bit, come back to 500, because you're still making sure that you don't go in arrears, and that's helping you keep that money safeguarded, and plus your own situation safeguarded with the bank, with your liabilities.
Look, thank you. That's a very financial term. So from a simple person point of view, if your car loan is at at 10%, I would say, and your home loan is at 5.5 and maybe having a bit of difficulty in repayment, you would bring your car loan, merge it with your home loan, and bring your monthly repayments down.
Correct.
Thank you. Let's say if I'm a tenant, because Sydney is one of the most expensive cities to rent. That's a national data. We looked at the ABC documentary as well. Now, what steps would you recommend me to get into the home loan market or have better savings?
Okay, look, I normally go off examples of my current client, as you know by now, as many videos as we've done, because that's the best example for me. That's a real example, literally, that's happening in the market currently. I am talking to somebody. In fact, they've signed a contract on a property after renting for 10 years, and they realized the repayment on the rental currently and the repayment on the home is about $300 apart. So you're paying $300 more on the home loan while actually being able to have your own home. And that money that you're paying towards the rent is not helping you anywhere in the long term or even the future, or like it's not even paying anything off. It's letting you live day by day, basically. But if you're buying a home and if you're paying it off, it's only going to help you pay off that asset. If you can actually pay $300-400 more compared to what you're doing in your rental, you're paying your home off. It's your principal as a place of residence. You're paying it off, and in 10 years time, you will be able to pay it off. Further down, repayments will start going down. So eventually you've got stability, because that's what's missing, obviously, because when rental market is going up, there's no stability. People can't afford to live in that rental market because, the weekly rent's going up by $100 or $150. All of a sudden, that's $600 a month, and it's impossible to cope up with it. But if it's your own home, you think at the back of your head, that's fine. I'm actually making it still because it helps me paying off my asset, which in long term is only going to obviously increase 5%, 10%, depending on how the market is at that in time. And then plus you're getting equity. So there's something coming out of it. And number two, as far as the deposit is concerned, because that's the biggest concern, obviously, digging into how much deposit can be saved by renting and paying so much money. Well, there is still 5% government schemes, and there are a lot of clients of mine, again, current examples, literally done 2 applications today for 2 different individuals, 5% deposit scheme with Westpac, and that's another addition to the 5% now get deposit scheme. Before it used to be NAB and CBA. Government has given them those many seats, that can be obviously looked on as well, because at 5% saving, you're not paying any LMI, government taking care of the rest of the 15%, lets you get into that. So if you're a renter right now, try and save that 5%. Again, budget expenses as low as possible. Squeeze yourself for the time being, ride that wave, and you'll come out smiling on the other side.
Okay, now on the complete flip side, I had a meeting with you, a meeting the client at the moment. They are with a lender. They're looking at change a lender as well, and they want to pay off quicker. So what advice would you give someone like that? How they should structure their loan? What lenders would you recommend? And also maybe a small example.
Look, as far as lenders that I can suggest, or lenders that they can go to, it again depends on individual situation, where they are, which lender they are with, what situation is. But even if you take an example of literally any bank, let's say Westpac, CBA, NAB, any of the big fours, or even the other banks, the structure and the formula is this, right? You make sure that you got a variable or a fixed, no matter what it is, if you can have an offset account with it, because there are some lenders they allow offset with fixed as well, right? There are obviously lenders they allow offset or redraw with variable. According to the calculation, and that's based on a real calculation, if, for example, if you have $1 million at a 6% interest rate, if you're paying that as per you're paying, it's going to take you 30 years to pay for that. If you can take $100 out a week and put that towards your redraw or offset account, you would be saving in excess of $180,000 only in interest, and plus you'll be paying off that home loan, which is going to take you 30 years in 26 years. And with just $100 in a week, again, just $100 a week could be a lot more for different individuals, but that's based on an actual calculation, which I've told my client, and they're actually doing it. Because again, $50 as well, it's still going to save you $90,000 in interest, which is as much as an annual income, actually more than an average annual income in Australia.
Okay. Now, when people get their new home loan, would you recommend taking a life insurance?
Absolutely. Look, I mean, somebody did ask me this question very early in my days. The only question I asked them back was, you got a car? Like, yep. How much is the car worth, if you don't mind me asking? They said about $25,000. I said, do you have an insurance on it? They said, of course. I'm like, so you got an asset which is $25,000, which is a depreciating asset, and you got an insurance for that, and a $500,000 house. You do the math. Do you really want insurance for that or not? And the answer was obviously quite yes. And I would say the same thing. You're the biggest asset to yourself, to your family. So I would say 100% get in life insurance. Cover yourself with anything that you possibly can, because that's what insurances are. Now, when you don't use it, you don't realize how important they are. But when you got to use it, when you get to actually, in the situation, but if you use it, that's when you realize how important, not only for you, but actually for your family.
Thank you. Look, guys, thank you very much for watching. And a lot of you from my other reels, especially on the tax breaks and CGT, and also some of the tips I gave about borrowing and everything. And you've been asking who my broker is. Well, this is my broker who does all of my deals. And if you want to reach out to Aman, I'll put his details in the description, and we'll put in Aman's contact details in terms of email, mobile, and everything. You can reach out to him, and Aman will be more likely to give you the same advice which he gives me.
Absolutely. Thank you very much, Mr. Simpleman, for having me again.
Thank you.